Welcome back to the Property Frontline. Today I'm here again with Scott Hoaxang for our Market Watch episode number 17. Hello, Scott.
Hello, Deborah.
In this episode, we'll be reviewing, as usual, the Australian property market performance for data up until the 1st of May 2025. We'll look at data across the main data sources that are reliable. And in every episode, we also cover a special aspect of property for our In Focus session. And this time we are looking at the high cash flow properties and also dual occupancies market. So there's a lot of information to cover. So let's get started. And so, as per usual, we normally cover data on performance of the Australian property market from CoreLogic, which is now Cotality, also SQM Research and PropTrack. And we combine all of that into a nice, neat little table. So, Scott, would you like to cover off the first four main areas of the country?
Sure, will do, Deborah. Thank you very much. We've got a whole table full of black, which are positive numbers, and just one red negative one this month. So that's quite interesting. For Sydney, for the month of May, CoreLogic had the house price market up 0.4%. PropTrack had Sydney up 0.5%. SQM showed a small decrease at minus 0.1. And let's remember that's asking price data. We just have to watch that going forward.
And whereas the others are actual sales results.
Correct. On the Melbourne line, CoreLogic 0.5%, so pretty decent month for Melbourne. A lot of people were talking about this PropTrack number, though, which was 0.9%. I saw that in many places out in the media.
Yeah.
For the Melbourne fans out there. And that actually is the highest monthly growth rate in the last 3 months across our three data sources for Melbourne. Some back looking just to kind of see. SQM asking price data was up 0.8, so that was along the lines of that as well.
They're feeling positive in Melbourne.
They're feeling a bit positive, maybe the interest rates, and maybe the weather hasn't been so cold. Over to sunny Brisbane, your new homeland. CoreLogic up 0.5%, PropTrack up 0.3%, so slowing a bit, and SQM had Brisbane up 0.6%. And down to the land of churches, Adelaide. Good positive growth there. CoreLogic 0.3%, PropTrack 0.6%, and really a real outlier here. I did notice this when SQM put that number out. Asking prices down there up 2.7% for the month. Maybe it's just a one-off. We'll have to see what's happening there. That also was the highest growth rate we've seen there last couple of months.
Okay.
So we'll hand back over to Deborah to take us through the rest of the capital cities.
Okay, thanks. So over to Perth, CoreLogic has sales prices improving by 0.7%, PropTrack up 0.3%, SQM asking prices of 1% increase. Hobart, CoreLogic up by 0.7%, PropTrack 0.2%, and then SQM asking prices of 0.3%. Darwin, something's happening there. CoreLogic has sales prices up by nearly 2%, PropTrack up by 0.2%, and SQM asking prices increasing by 1.4%. And then Canberra, let's not comment. CoreLogic has Canberra prices increasing by 0.5%, PropTrack up by 0.3%, and SQM 0.4%. So something new that we're adding into Market Watch this month is something that we have been tracking for the last 2 years. And what this is the annual price increase. Could you help me out?
Yeah, that's
What we call it?
it's the annual change in prices at any one point for the
Each
different
month.
capital cities. So we can look at that over time.
Yeah. And so we can see here, like of note, we can see where Hobart was the worst performer in price changes in June 23. And you can see where Melbourne, which is this orange line, so it really started to track down from March last year and then really looks like it hit its lowest point at the start of 2025, and now we can see it creeping up. Is there any other ones that you would like to point out, Scott?
Just purple Perth there. We can see the Perth boom that occurred over 2 years where growth surged to over 20% per year. And the lines under that are very likely Brisbane and Adelaide because they both showed their own mini bursts. All three of those cities are still at all-time record highs, actually, interestingly.
Yeah.
Growth is slowing by looking at the curves.
Yeah. And of course, Darwin, and now we're talking about every single line. Yeah, because Darwin's creeping up. There's something going on there. But, it's such a small market. It doesn't take much for any activity to have some kind of effect.
Great.
So, yeah. And for me, this sort of works better for me than just numbers. Righty. So, special points that are impacting the market last month and in coming months. Would you like to cover off the points here, Scott?
Sure, I'll give a quick run through and let you add and clarify. Back in Trump land, we always like to have a comment there. The tariff policy is an ever-changing thing, but we all saw the memes over the past couple of weeks. The taco memes, Trump always chickens out. Effectively, he has been pulling back dramatically on his tariff requirements, whether they're saying they're cutting deals with people or relaxing them or extending them. I think the stock markets are basically now believing they're not going to be nearly as bad as what the early commentary said, at least. I think the jury's still out on where they end up, but maybe a bit less alarming than we were a couple of months ago.
Yeah.
Over at the RBA, we're seeing lower inflation forecasts actually in the U.S. We've had some good inflation prints here, and we're seeing rising expectations for more rate cuts through the end of the year. I think, Deborah, you were saying you'd seen one bank now saying maybe as many as 4 more to come.
4 more over the next 12 months, and that's due to the RBA. They're concerned about the uncertainty, ironically.
I'm sure anybody with mortgages would appreciate having their mortgage rate drop 1%. Myself included, and get some people some additional spending money, and secondly, boost their borrowing capacity for their next purchase.
Yeah. So let's see how that goes. Yep.
In sunny Queensland, we've got our premier up there, David Christofoli.
Yeah.
There we go. I almost got it right. He's extended that large $30,000 first home buyer grant another 12 months. We actually had several clients racing to find stuff, trying to get in under the wire, and luckily we were able to tell them, you've got another 12 months to look, so let's not jump into something that might not suit them for the long term.
Yeah.
Do you want to take the federal home guarantee?
Okay, yeah. Yeah, but just on that $30,000 grant, because until they did that, when it was still $10,000, was almost making more sense to buy an existing dwelling. We've been doing some analysis on that in our business, and it's only having those bigger grants will actually get people moving into the newer stock, I think.
Yeah.
Right. So looking at the federal scheme, this is the one where buyers might only have to put in 5% deposit and the government covers the difference without you having to pay lenders mortgage insurance. So the eligibility changes should be coming in from the 1st of January. So that might mean that people might put off jumping in, and they might wait until early next year to make their purchases. But if you're ready now, you should buy now. And also super changes. So this is the argument where the government is looking to tax people with assets in their super, where the assets are over $3 million. And it could mean that they'll be taxed at a higher rate. And so we are expecting that some people are starting to rethink what they have in their super, and it might cause some people to sell some of their properties that they've got in super. And the thing that really bugs me is people are saying, oh, well, it's going to impact such a small percentage of the market. But make up your mind. Decide what you're going to do. Set the rules and then stop mucking around with it, because people make long-term decisions based on the rules, and it's easy for the government to flick a pen, but for everybody else who's got to rethink what they've got going, it can be very tricky. Do you have any thoughts on that?
Very fair point, actually. Don't fiddle with the rules. We do this for a long period of time. I do slightly fall into the camp of maybe having higher tax rates on some of this.
Yeah.
Yes, but like I said, I'm with you in terms of let's set the rules and leave them there so people can make their plans over the next 10, 20, 30 years. Yeah.
All right. So our In Focus session. So Scott and I have done a lot of research on this. We're both very active in this part of the market from different perspectives, which you'll see as we talk about it. But basically this session is really about those properties where, you are getting a good rental return, usually from being able to rent out more than one part of the property separately.
Yes.
Okay.
Yeah, I'll just at a very high level, we hear dual occupancy thrown out all over the place. What is a dual occupancy property? This is what it is to me. You can rent the property to two separate tenants on two leases. So each tenant has their own space in the property. They may or may not have two separate meters. If you have two separate meters for things like gas, water, and electricity, in most states, you can charge those tenants usage. Not in all, so that always needs to be checked. And they have to be compliant with all the regulations. And that often means building codes and fire-rated materials. And you've got to be able to ensure this as a dual occupancy product. So that's what we're talking about. The examples I came up with were duplex projects where you have two houses on a block of land and those can be subdivided and sold separately. Houses with granny flats that can either be attached to the house, most likely they're detached and in the backyard. Sometimes they're over the garage. We call those Fonzie flats in our space. For any fans of the US TV series Happy Days and the Fonz, no movie studio comes after me for that mention without a trademark mention. Dual key houses, they look like a single house from the front of the road, but there's split down the middle. So you've got a firewall down the middle and you've actually got those two separate kind of units to rent out to clients. There are such a thing as dual key units. And actually, this is really what existed 10, 15 years ago. There were more of these being built where you'd have two separate spaces in your unit. I often staying these when I go up to the Sunshine Coast because I know a few buildings that are full of them. And you enter the unit through a single door, and that door then branches into two for anybody who's ever seen one of those. So you've got two totally separate spaces in that unit. They mostly have single meters, which has some limitations. And there are some townhouses that have been built that are dual key, so they are set up to be rented to two tenants. They're quite rare. We're not talking about rooming houses, which we talked about on a previous podcast.
Yeah.
Co-living houses, which are rented to sort of several people on separate leases. I said not triplexes and quadplexes. We're mostly sticking to properties rented to individuals. And just be careful. There are these multi-gen houses in my space, the new property space.
Yeah.
They might be presented as a dual occupancy, but they're not. They have to be rented to a single family on one lease, and they can stick an adult child or an older family member in that extra unit. So it may look a bit like a dual key house, but it's not.
Okay, some examples?
So we've got an example here of a duplex project. This is actually being built at the moment up in the Harvey Bay area by a client of mine. And you can see you've got two houses down in the floor plan with a wall down the middle.
Yeah.
So the two 4-bedroom houses, garages. This project's being built for slightly over $1 million. 2 rents coming out of the property, and this will be subdivided. So the investor who is building this is ending up with 2 properties to sell to maybe potentially first home buyers that want to live in that Harvey Bay area.
Maybe not only first home buyers, could be retirees.
Could be downsizers, that don't really want the bigger house.
Yeah. Okay. Next slide.
We've got, this is more traditional 2-story house here, something that can be built down at Oran Park. Look, it's not on a big block of land to keep the costs down, but the builder does hang a 1-bedroom single floor granny flat out the back. So you've got a 4-bedroom house, a little 1-bedroom granny flat out the back. The person in the granny flat would park on the street.
Wow.
Yes.
That is tight, isn't it? This is like, I think in Melbourne they're doing this as well, and that smaller block. Wow.
You're just not getting any yard space in these. You mean you have space for your clothesline, maybe a small alfresco table where you can sit out and have dinner with your friends, but that's it.
And look, this is not unusual. When we think about what it was like living in Sydney and Melbourne 100 years ago or whatever, when we were just living in that really tight terraced arrangement. So, yes.
Balmain, Paddington, of course, those areas are very close to the city, but they are jammed in even tighter than these, and Surrey Hill in many situations.
That's right. Yeah. Okay. Alrighty. Yeah. Next one.
So we do a lot of these dual key houses, and I mentioned them before. So you've got what looks to be a house from the front. This is something you can build up in the Hunter Valley, actually in the Huntley Estate. And you've got on the left side in that floor plan is an entire 4-bedroom house. The dark line down the middle of the plan is a fire rated wall. And then on that right side, you have a 2-bedroom unit, which is sort of the granny flat, but it's attached.
Where's the front door? Here.
The front door's down the side. So, and the developers tend to like these because they don't want things that look like dual occupancies in their estates. They'd like for it to look like a normal house. But if you can squeeze a second tenant in there and boost the rent up to over $1,000 a week, these become a much easier hold for investors.
Yep. Sounds good. Alrighty. And then this one.
This is a dual key house in Queensland. They do a lot of these in Queensland, and they do look a bit more like 2 units in a house. You'll have 2 garages out the front typically. So each tenant is going to get their own garage. It is a plus. May not look like a traditional house from the front. And again, you've got a 3-bedroom unit on the right and a 2-bedroom unit on the left.
Okay. Yeah. And ideally, the aim is to be able to purchase them at a price where the rental return really covers all costs.
Yeah, we'd like to see 6% rental yields on these, and that they're cash flow neutral at start and become highly positive over time.
Yep. Okay. Sounds good. And then this one. This is the unit, which I found fascinating.
Yeah, builders building some of these way out in Schofields. I don't know if the entire building is dual keys, but there are some in there.
Yeah.
120,000 for one of these, but you can
Mm-mm.
see the main door down at the bottom. You will come in,
Yeah.
and there's a 1-bedroom unit on the left with its own balcony, and then over on the right is a studio unit with its own balcony.
Yeah.
They're not great for renting to two tenants. I will kind of caution anybody who sees these online and maybe thinks these are going to be great investments. They tend to not have 2 meters. They're better maybe if you want to live in the unit and have a bit of side income to help you pay down the mortgage. I'd say somebody like that might give these a look. I also think they don't get a lot of capital growth. I've just looked at too many of these.
Mm.
And I think you said earlier, Deborah, that could just be to the fact that they're new units, and a lot of these new units are not getting much growth.
Yeah.
But I
A lot of supply.
have not seen the growth bit of this, unlike some of the houses where we actually have seen some high cash flow houses get very good growth as well.
Yeah. And so it's basically 2 1-bedroom apartments, like never a good idea.
Yeah, there are a bunch of these in Chippendale down at Central Park. There are
Yeah.
some in Epping, in Sydney, different spots around the city. I guess the developers figure there is demand more
Student.
from home buyers, and I think they're often foreign home buyers where they have
Yeah.
family members that they want to stick in these units.
Oh, yeah. Okay, that sounds good. Right. Oh, yeah. And this one?
Little sneak peek at a personal property of mine. This is up in Moreton Bay, just completed back at Christmas. This is a house. So you've got a terrace house in the front. You can see the 2 garages, and there is a granny flat built over those garages. So it's a 3-bedroom house and a 1-bedroom Fonzie flat.
Where
And
is the unit?
the unit is above the 2 garages.
Oh, okay.
Oh,
That's
you've got
there.
some windows probably out of the bedroom there, and then if you look on the side in the middle picture, you can see a large balcony hanging off that house. That's the granny flats balcony. So they've got a very large balcony up there, a nice outlook.
Yeah.
And we even put a wash line up on that balcony so they could dry their clothes.
Right. And so where is the actual house?
The house is in the back. So it faces a nature reserve. So the back of the house is in the back. So you can see a little alfresco area where you can sit out and look at the trees and the birds.
Yep. Okay.
These are very hard to build. Let me tell you, we have hardly done any of these, and it's due to the complexity of all the firewalls that need to be put in these. And private certifiers follow a very specific set of rules. So you need to have a builder who understands this product to even think about doing one of these.
Yeah. Well, yeah, tricky.
All of that house is packed on about a 210 square meter block. So I'll just leave you with that. Large house unit, kind of like the Oran Park house in Granny Flat, if you think about it.
Yeah. But it's in a nice estate. I actually drove past this recently. So on to the types of properties that I buy. So where Scott will normally help you buy something brand new or build, what I will normally do is come in after a property has been established for a couple of years. So the first few years of a new build, you will get a lot of return from depreciation. But when you buy something that's already, that has been established and is not technically new, then the depreciation isn't as huge, but really depreciation wouldn't be a reason for us to purchase a property. We are normally looking at what's the purchase price, what's the rental return, is there future growth, staring down the gun barrel of that area. So we're looking for areas that have got a lot of capital growth coming to them, diversity of tenants, and where they're located with very established transport, shops, hospitals, that kind of thing.
That one also looks like it's on a large block, so it looks like you've got quite nice outdoor spaces for the tenants, and the newer ones being built to hit the price points are likely going to be on smaller blocks in the new estates.
Yeah, that's a very good point. I wouldn't say that if it was on a smaller block, I wouldn't look at it though. For me, it's just all about the returns.
Yeah.
Yeah, so we do quite a bit of that. And then this is the other type of thing we buy in such a wide range. So everything from a very older property that already has like a brand new granny flat already built and approved on it to something like, which is what I would call a hybrid. So it's a brand new property or recent build, but it also has a very well developed, built almost the same time as the house, the granny flat out the back. And so you can see here, I think this one is something like 4 bedrooms in the front house. And then we have seen somewhere there's 3 bedrooms in the granny flat. But this one actually only has 1. But yeah, so a wide range. And once again, we're looking at what's the purchase price and what's the rental return, and then looking at what's the chances of capital growth and future rental income. This example is actually in Western Sydney, right near where the airport is being built, and so there's a lot of capital growth going in there.
Deborah, out of curiosity, would your buyer who buys that property, are they looking to live in the house and then rent that granny flat out and just have some extra income coming in? Or are they more likely to just view that as an investment property and want to rent both dwellings out?
I would say about 75% would be investors, and some people put these sorts of things in their SMSFs.
Yes, correct.
And there are like first time buyers who will buy something like this and see the granny flat initially as a way to pay down the mortgage, and further down the track might be a teenage retreat. So versatile, but the variety of things that we can find, it's pretty much endless, and what you can do. And then the third type of thing I would say we buy in this space is where it's an older property, older house on a large block where it might have, like a car garage out the front, but where we can either knock that garage down and build a granny flat out the back, or where you can find some way of just keeping that front garage and having access down the back and just build a separate granny flat out the back. Very, very popular. And so you can normally buy the older house on the bigger block more cost effectively, rather than buying something that already has the granny flat established. And then the other type of thing that we buy a lot of is something like this. It's a bit faded, so you'd have to sort of squint, but where there's an established house, a very large carport, and very large, what we call a shed, but where it has been built to a good high quality standard, and where there might just be a few more tweaks that need to be made to that property to actually get it signed off as a legal granny flat that you can rent out separately. So that might be putting in the separate water meter, putting in the separate electricity meter, and fencing it off. Every property is different, so some might need a lot more work, might be complete push downs. But yeah, if you can pick up something like this where there's not too much work to do to actually be able to rent it out, then you'll get that really nice sweet spot of a good price, and where you might have to put in a little bit of extra cash to get it up to, that separate rentable quality. And we bought something like this recently where the rental appraisal for the property without doing that final conversion was around about $750 per week. Doing the conversion, so saying that these property, the house would be rented out separately, granny flat rented out separately, takes it from $750 a week up to $960 a week. So it's worthwhile, like, doing the work to.
Yeah, definitely.
Yeah. But once again, like, these are the sorts of things that you look at before you buy and make the assessments. It's quite technical buying, but that's all fun. And so we've cut off a bit there, but so what Scott and I did to actually prepare for this session is we rechecked all of the legislation for our 8 main states and territories. And we were going to, like, run through all of the legislation for dual locks and granny flats, but it became too much. And so what we've actually done now is just summarized the things that you would need to check, apart from, everything else, like the viability of the price and the rent, etc. But to actually do either a conversion, so say you're looking at a property and you want to be able to initially rent out the main house and then in the future knock it down and put a duplex on it, you would need to make sure in every state and territory that you checked things like the zoning, whether you have to do a duplex through a complying development. I won't go into the technical definition of what that is, but complying is quicker, DA is longer, so a full DA process. Then the block size and width. If the block size and width is too small, for example, in some areas of New South Wales, you have to have a block size that is 750 square metres. That particular council doesn't care about the width, but it must be 750 square metres. If it's 650 square metres, but if it's 649 square metres, your block size can't do it. So it's really that specific. But of course, in New South Wales statewide, basically, depending on the zoning, you only need 450 square metres. So we'll talk about the difference between state and council in a second. These are the items that I would check before I'm buying a property. This is where we sort of go, we put properties to the side if they don't meet the zoning, the block size, got to check, of course, flood overlays, character, and bushfire. Then what kind of size of property can you build on that block, setbacks, so how far back from the front and the back. Then you've also got to check what's underneath, so sewer and any other main stormwater pipeworks that are underneath the land. And of course check for easements, and then what's the issue with parking. And then if you wanted to buy a property where you're going to put a granny flat on the block, once again you've got to check the zoning. So will the zoning of that particular property allow granny flats? Then block size overlays, can it be a complying development or a full-on development application? So heaps of council approval. And then side setbacks, the dwelling size. So I've got here up to 60 square metres. That's kind of like your safety amount. But some states will say that you can build your granny flat up to about 80 square metres. Some areas, some council regulations will specify how close a property can be to the main house. How close can a granny flat be to the main house? Yeah, the building code. So it's got no word talking about this briefly. So building codes have changed over time, and yes, so you've got to be very careful if an agent says this will qualify. This will, you can rent this out separately. You just need to get that final approval. And so if it hasn't been done properly, like with a membrane under the slab, it could be all over. Anyway, I won't labour that point. And then the requirements to rent. And And always check the parking. So if you've got to build a granny flat and the requirements say you have to have off-street parking, will that work? So you've got to check that before you buy. All right. So other things, over to you, Scott. Important to know.
Sure, just put a little short list of tips here that I'll run through. We already talked about those gnarly sales agents out there who advertise, buy this dual occupancy property with this high rent. There may even be two tenants in place.
Yeah.
Sometimes that's not a legal dwelling. And as Deborah has said, you've got to do all the checks yourself. You would think that for the sales agent to tell you that, or the tenants being in place, you would think that that would be allowed, but that is a bad assumption to make.
Yeah.
The term dual occupancy means all sorts of different things to different councils. So don't walk in the door and think that by saying that they know exactly what you're talking about. It could be a duplex project. They might be talking about a dual key house. Other terms you're going to see are auxiliary units. Some like the term secondary dwellings for granny flats. You've got to take that next step and dive into it and get into it at the council level so you don't get caught out. People buy these dual occupancy properties primarily for cash flow. This is what I find in my space.
Yeah.
And you can get less capital growth than just buying a standard house. Not always, but you can. And one big reason is that when you go to sell these properties, you may be selling primarily to investors. So you just got to factor that into your plan. Occasionally, we find a property that isn't like that. It's very high cash flow and achieves the same growth as houses, or maybe even slightly higher. And there's a term in our industry, call them unicorns. They're very hard to spot. If you ever catch a unicorn, you want to keep it forever. Deborah, what does a unicorn mean to you?
Well, yeah, it's kind of what I specialize in finding. So yeah, this is what we spend our time looking for. Yeah, it means that the search might take a little bit longer. That's what it means to me.
Yeah, I think sometimes you do need to wait. You can't just run out and grab the first property that comes along and expect it to be a gem like that.
Yeah, they're hard to find.
Yeah. Number 5 is, look, it doesn't always add value to add a granny flat to these older houses. So again, back to your space, Deborah, what are you going to do with that property long term? I mean, is it a duplex project and you're going to knock everything down? How long are you going to have the granny flat on there to get a return back on the investment that you've made? One way to minimize that is to do the garage and other rumpus room conversions that you talked about earlier, where you haven't spent that much to create that legal granny flat.
Hmm.
And the last thing is, look, more and more councils are allowing these granny flats to be rented out separately. 5 years ago, in many parts of this country, if you said granny flat, let's say Brisbane Council in particular, you could only put a family member in there. It's actually kind of a quite odd set of rules we had across the country. And it wasn't based so much on the building codes. I think it was based more on your neighbors and people going to their local councils and feeling like granny flats were bringing too many residents into their areas. And they didn't like that.
No.
New South Wales was really ahead of the curve there because in their housing SEP, they allowed granny flats statewide if you can follow the rules. I kind of wish other states would get to that exact level, but I think we're seeing signs that we're moving that way.
Most are now, yeah.
Yeah, so kind of a wave of granny flats and dual occupancies sweeping the country versus, let's say, something like Airbnb where the rules are being tightened and it feels like, they're trying to squeeze those out in the space. So that's going the other way.
Yeah. Okay. Alrighty. Well, yes, and just some final tips. As always, when you're looking at property in this space, whether it's brand new or just off the plan, or existing, watch out for misleading data. Always use trusted sources. Don't just take what someone has told you and have another independent source to just double check, can you achieve that sale price if that's what they're saying? Always conduct the financial pros and cons. So look at what the costs are, what the rental return will be, and look at your different scenarios. Do it via numbers and ensure you double check council regulations. So we've talked about that a little bit, but it can get quite complex because each state has their own regulations, so they set the scene, and then each local government council has some level of control over what they will allow. And councils are always tweaking with their rules, always. And so even if you can look up and verify that the property that you're interested in says you can do this and this and this, what we always do is we use that as our guide, and then we call and confirm that nothing's just about to change, because it's a constantly moving situation. But anyway, that's the fun of it. Alrighty, and so yes, so if you need some extra help, Scott and I can provide assistance, full end-to-end services, but we also have a special program within the property frontline that is targeted towards people who just want to be able to have a few rules and tips and then be able to do the search themselves. That's the Buy Success program. So wrapping up, join us again next time where we will cover off our mid-year market forecast. So that will be for our July market watch. Plus, as usual, there'll be a lot more that we'll pack into the session. Thanks very much again for watching. If you would like to be notified about our next episode, make sure you subscribe. And if you would like to speak to Scott or myself, you'll be able to contact us through the information we've got in the description box. But otherwise, take care for now, and we'll say goodbye.
Bye, everyone.
Bye-bye.